Let's
Indeed.
talk about the individual stocks and look at IBM, which you'll know is the world's largest technology services company. And it's in a transition of selling businesses such as low-end servers, cash registers, and semiconductors to focus on high-growth areas like security, software, cloud services, and data analytics. And this is a move that IT companies have been embarking on for many years to higher margin business effectively.
Right, so revenues have been coming down, but profits have been sort of beginning to look like they might start going up. So this one is in transition. It is the largest and it's the most storied in this space. Got lots and lots of employees.
Market cap $172.4 billion, PE of 14.5, dividend yield of 3%. Share price graph will give us context here.
Looks pretty good. The share chart will come up while we're talking. It has rebounded, as you see there, at the beginning of 2016. But if you go back some years, it's taken a long time to produce that little twitch at the end, JP.
Yes, and if you look at the earnings profile compared to the share price graph, the earnings profile has been flat. And the reason why the share price came down is because people were scared, saying that, oh my goodness, if earnings aren't growing, underlying this, a big part of the business is slowing down, which it is, and that's part of this transition. So the traditional business, ERP implementation, more servers at the property of the companies, that's slowing down. People are moving to the cloud, moving to Watson, the artificial intelligence service. That means the one part of the business is shrinking, and they're trying as quickly as they can to grow the other part to take over the growth from the more historical
Given
business.
their size, though, you wouldn't anticipate that they're very nimble, i.e.
No.
that they can move and morph themselves into a different business model very quickly.
Well, they would say they're an elephant that can dance, which is the title of the book that the previous CEO, Lou Gertzner, wrote. And that is exactly it. It's a company that is big, and you would think that they labor, they can't really turn this big ship around. But they did it before. If you think about the changes when Windows came in, and they're doing it again right now. So far they are successful. You can see in the last year, the market has given them the benefit of the doubt.
But Paul, they're not sexy like the Googles and the Apples, etc., etc. I mean, isn't this just more pedestrian in terms of the story?
I think the problem is when you have a company that has top line revenue that is declining because of disposals and shutdowns, then people get anxious. But the core business is beginning to emerge. The CEO, Ginny Rometty, has done a good job, I think. Look, it's got 380,000 employees, global operations, but the core business is migrating towards that software consulting advisory. Remember, their clients are banks, their clients are governments, their clients are big telecommunications companies. So I think that and the application of a very strong research-driven internal culture. Remember, they invented like the barcode and the ATM and all sorts of modern day applications. They still have a research lab which produces people who win Nobel Prizes left, right and center. You mentioned in passing Watson. Just talk about what Watson is. I mean, it's
you were saying artificial intelligence.
Yes. So basically it's an algorithm that can learn. So you feed it data, it looks for links in that data, it looks for patterns, it uses that to predict, and it's got multiple applications, everything from voice recognition to Google Analytics, which is a competitor program, but it's the same type of environment, to anything you can think of that has a lot of data that needs to be analyzed.
And that's what they're rolling out now to their major
Do
corporate
they own
clients.
this?
Yes, they own the
Watson?
IP, and you can effectively rent some hours or rent some capacity and upload your data into this cloud that Watson then analyzes, and more companies are using that in this time of social media. A lot of data that's available out there publicly, people want to analyze it.
So it, for example, does that. It looks at an insurer's data on the social media behavior of their customers and all sorts of things you may not think were correlated, which it finds then and helps.
And then it comes back and it gives you some insight
stuff
into your database.
But is it hot or not?
Yes, and would you choose it over your IT, your Googles and your Apples, etc., hot or not?
Well, we haven't in our portfolio, but I do think it's beginning to look much more interesting, and that share chart reflects a bit of a recovery, so I'm going to squeak it as a hot.
JP?
Looks like the transition is on track, so I would also say
You like the valuation?
I do. Very good valuation. Very attractive.